Cryptocurrency is gradually making its place in the world's conventional financial systems. According to recent data, the total user base of approximately 6,000 different cryptocurrencies has increased to 300 million in the last 3 years. Additionally, both public and private sectors are starting to adopt the idea of cryptocurrencies in their financial transactions in the form of value storage, payments, and investments. Cryptocurrency evolved from the blockchain. However, early roots can be traced back to decades ago with the advent of cryptography technology. Cryptography is the art of writing or solving codes, and the advancement in cryptography has helped reinforce and develop an array of encryption techniques that make the cryptocurrency web secure and reliable for numerous kinds of transactions. So here are the top 5 reasons that will tell you why cryptocurrency is the future of finance. Welcome to Wealthy Mindset, where we explore unique and breathtaking angles from the world of money, economics, personal finance, and investing. But before we dive into it, please like the video and subscribe to the channel. Also, click on the bell icon right there so you never miss any of our subsequent videos. Number 5. The beginning of decentralized finance. In the 21st century, the requirement of secure, transparent, and accessible financial systems is a priority. Many believe that the present centralized finance systems have on numerous occasions failed to dispense financial independence and credibility to consumers. You can think of the 2008 real estate and economic crisis for reference. As a result, many people think of DeFi, or decentralized finance, as a system that can provide more transparency, greater transactional security, and can substitute a few traditional financial processes in the near future. Decentralized finance means a system where there is no singular authority controlling the system, which basically means that the system or financial institution is run by the people. DeFi is backed by the blockchain, which is a completely decentralized technology supported by nodes or computers that act as servers. Ever heard of people mining Bitcoin? These people are doing nothing more than lending some computing power to the blockchain. The escalation in demand and accessibility of cryptocurrency exchanges are also playing a crucial role in the growing popularity of various DeFi systems globally. Number 4. Heterogeneous values of cryptocurrency. Even though cryptocurrencies do not have an innate value, they are valuable in the following ways. Payments. They can be used to complete transactions while purchasing goods or services without the help of any trusted third party. Stable coins. They can be affixed to products like oil, gold, and even currencies, for instance, USD. Digital access and ownership. Cryptocurrency can be used to purchase licenses of many electronic or non-tangible files or non-fungible tokens, also known as NFTs online, which can be further used for repeated viewing and sharing for an indeterminate period in accordance to the original owner's permissions. For example, the CEO of Twitter, Jack Dorsey, sold his first tweet, "Just setting up my Twitter," as an NFT, non-fungible token, for $2.9 million. Privacy. Cryptocurrency transactions take place in a way where the users and owners remain pseudonymous. They can be identified with a public key, which works as a unique identifier, hence maintaining complete privacy. A few other ways to use cryptocurrencies are in the form of digital gold and value storage. Number 3. Bitcoin, a form of cryptocurrency, finally finds a home. In 2021, Bitcoin's value skyrocketed when El Salvador became the first country to accept it as a legal tender in September. The world's largest cryptocurrency in terms of market capitalization has benefited with numerous FMAs, first mover advantage, over the last decade. But being acknowledged by a country as a legitimate currency was a great novelty. We can be sure that in 2022, we are very likely to see, at the minimum, one country, if not more, acknowledging Bitcoin or any other cryptocurrency as a lawful form of currency. The reason is pretty simple. With inflation rising in most of the countries around the world and governments printing money and implementing spending plans to cover inflation, the cost of goods and services are still rising. Hence, cryptocurrency, which demands a much lesser investment in infrastructure and implementation, is the next best alternative. Number 2, banking and transactional benefits. With the rapid growth of cryptocurrency, the accessibility and acceptability factors continue to be in the limelight. With the advancement of better cryptographic techniques, investors are experiencing a better cryptocurrency financial ecosystem. Along with privacy, the system offers many other benefits. Security. Transactions that take place with the help of cryptocurrency cannot be changed or tampered with because of its transmission in extremely high security networks. But no worries, the financial records can be afterwards traced for any kind of proof. Accessibility. There are people all over the world who do not have access to conventional banking or financial services due to their lack of personal documents for identification. These people who do not have a bank account can now benefit themselves from this new financial model, allowing them instant access from anywhere around the globe with an added advantage of low transaction costs and fast processing payments. Number 1, new rules for cryptocurrency are emerging. US lawmakers have sensed the potential of cryptocurrency and are toiling with it. In December 2021, 6 executives from different cryptocurrency companies were summoned to testify before the U.S. House Committee on Financial Services, where they analyzed potential ways for future legislation. Lawmakers in the United States have manifested interest in a variety of topics, such as when should cryptocurrency be taxed? Whether issuers of stablecoin should be considered as banks? And how to develop functional rules in a high-tech and complex industry. Solving these equations can be a bit tricky, so crafting the right standards may take a little bit of time, but we can expect great results in the near future. Cryptocurrency may need to overcome many more milestones before the world figures out a global framework in accordance with crypto-focused legislation. But the real question remains, if the whole system is decentralized, what's the point of a central power trying to control it? In a way, it takes away the essence of blockchain if you try to tame it. Gervais Grigg, Chainalysis's global public sector chief technology officer, said, "It's important to understand that the cryptocurrency industry wants to be regulated, but wants to ensure that proposed regulatory frameworks are feasible. Governments globally are working with industry players to create legislation that protects consumers and fosters innovation." As the cryptocurrency industry expands, it will prevail in ways we can't imagine yet. But with all the advancements and statements made, one thing is crystal clear. Cryptocurrency is the future of finance. What do you think about cryptocurrency? Do you think there is a need for legislation and control? Do tell us in the comments section below. For more interesting and cool videos, follow Wealthy Mindset. If you enjoyed this video, slap a like on it and subscribe to the channel for more interesting and informative videos like this. You can also turn on the bell notification so you don't miss any of our videos. We'll catch you in the next one. Until then, bye!